Welcome back to the channel. My name's Cole.Shelton. We are going to be covering Bitcoin in this video. Now, I'm not going to waste your time, so let's go ahead and jump right into it. We had our top at $69,000. Now, in my last Bitcoin analysis, we were going to cover this downtrend break. We broke up and then could potentially come into this downtrend. We found resistance. I said if we did not cross 54,000, 53 to 54,000, then we are not going to continue higher. And that's exactly what happened. We came into this area, and now we broke a very, very strong support level. Broke below this trend line, but that's not the one that I was talking about. I'm talking about this long-term support. That's where we stopped in the previous, so I don't think we're going to be stopping here soon. Now we have some light resistance or support at $35,000 with these previous highs and these previous lows. Now, what's going to really act as support is this $30,000 level. $30,000 natural support, and we have these previous lows all the way back from January 21st or 2021. Everything yesterday had a false breakout. We broke up. Everything was going to get bullish, and then just a very, very nice bear trap dumped. We see that VXV did that as well slightly. I know MTV did that, and I absolutely love MTV. We see we came up and then just absolutely dumped to the downside. And we do have increasing volume, so that's not what I want to see. Ideally, we're going to see some increasing volume with some stopping candles. So stopping candles is when we have increasing volume as the spreads of the candles are getting smaller and smaller. Let's go ahead and jump over to the weekly here. We have a very, very nice 3-bar play. If this candle closes with 2 days and 5 hours left, this is a very, very bearish sign. We have a nice bull flag. Let's go ahead and or bear flag, excuse me. Let's go ahead and take a measurement here. If we take from the high to the low, again, I'm going to be using my the 2 dots. That gives us a price target of around, again, that $35,000 level. $35,000 is going to be a very, very good key level that we're going to hold, because of this head and shoulders pattern also worked out when we were confirmed with the break below the neckline. Now, I do expect us to break 35,000 because that is not much support. We can see it's just kind of in a congestion zone. The major support is at 30,000. We break 30,000, we're coming all the way back down to 20. We have no resistance or no support until 20. Again, as trends move on, as bigger trends, if we go into the week to the monthly, let's think about the actual trend. We want to see a support and have it pull back all the way back down to $20,000. We can see that during a bear market, we pulled back to the 20 EMA. Or the 50 SMA, excuse me. It pulled back here in 2017 and the 2019 bear market. We did that back in the 2015 bear market. So I'm going to be looking for the same thing, and we can see that we really pulled back, make a new high. It's not a blow off top like it was the past 2 years, because there's more money, there's more people, and the market's going to take slower and slower to move. I do think this EMA is going to continue to move. Again, I do expect us to continue lower, possibly hit 35,000. Come back, have a retest of 41,000 before continuing lower. Let's go ahead and jump on the weekly here. I think what we're going to see is a nice bounce off 30,000, come up, and then continue lower. That's what I think. I think our bottom of this bear market is going to be around 30,000. If that doesn't happen, we are going to come down and touch the moving averages. Those are our only hope. Those are only support if we break 30,000. Again, we have 25,000, but that's psychological. Not a lot of people are going to be taking or buying there, it looks like we actually have crossed. Have we? Oh, we haven't crossed yet. Every single time the 20 EMA in the 50 SMA or moving average cross, we see on the weekly, we see a pull. We see that we're in a bear market. We can see back in the 2017 bull run, we were in a bear market, and from when we crossed, we had a 62% pullback. Crossed, we had a 60% pullback. Crossed, around a 60% pullback. So let's see if they cross now, let's do a 60% pullback. Where could that be? That puts us right at around that previous. On the weekly, we have the 200 moving average. If we go to the monthly, that's the 200, that's the 50 moving average that we're going to come down to. So I believe the bottom of this bear market will be somewhere in this area. Let me go ahead and adjust that. That's if we are truly in a bear market, which it could easily happen, which is okay. I'm going to be buying on the way down. Bitcoin's market cap is back under $800 billion, excuse me, and down 10%. Absolutely just dumping. People are just dumping on the market. And let's actually cover the Bitcoin dominance. We can see that the Bitcoin dominance is still just not wanting to be in the bottom. We see the top of the bear market, or the top of the bull market, was back when the Bitcoin dominance was at 35%. We're not even at 35% yet. So we'll have to see what happens. If this can continue to come down, that'd be ideal. And again, the Bitcoin shorts have also been on the rise. Very, very choppy, not really moving. Back in 2017, we saw it much higher. So we had some scares back in July and back in June, but we are not even close to those previous levels. Again, that's 371%. So we might be able to see it come up to really the 200 moving average. And if we can see that, that would be ideal. We have our total market cap confirming the head and shoulders pattern on the weekly. Again, we came up, broke down, retested this trend line, and came lower. We're coming into some resistance back into this 50 SMA. Now, what I wanted to point out, what I've been pointing out for the past, since beginning of last year, is that this previous bull run in 2017 took $500 billion to move it from here to here, or around 216,000%. Now, from the beginning, it took $1 trillion from here to here. 200%. So the more money is in Bitcoin, or in the crypto market, excluding Bitcoin, but everything is so diversified that we're not going to see those big runs like we were in 2013, 2017, which is sad, but that's just how it's coming into. Ethereum also broke a major support level, broke below previously, and we are not in that bear market yet from that 20 EMA and that 20 SMA cross. Thank you guys so much for watching the video. If you guys haven't already, consider subscribing. It's free. I'm going to be posting a lot of content on here. So I will see you guys in the next one. Peace.